When we talk about the biggest winners of the last 5 years, everyone thinks of Bitcoin. From around $11,000 in October 2020 to over $120,000 in October 2025, Bitcoin has multiplied more than 10 times. That's legendary. But here's the surprising part. It's not alone. If you actually look at the performance of some of the best performing assets over this same period, several of them rival Bitcoin's growth. And among them, one company stands tall: Tesla. Yes, Tesla. The same Tesla that's been called everything from a car company to an energy empire to an AI powerhouse. In the past decade, its stock has gone up over 480 times since its IPO. And what's even crazier, there's a strong case that Tesla could still go up another 8 times in the years ahead. So in this video, we're breaking down how Tesla got here, what powered its previous growth, and what could drive its next massive wave of gains. Hit that like and subscribe button, because this one's worth your time. Let's rewind. Most people think Tesla was born from Elon Musk's mind, but that's not true. Tesla was actually founded in 2003 by 2 engineers, Martin Eberhard and Mark Tarpenning, in a small Silicon Valley cafe. They were tinkering with laptop batteries when one of them asked a question that would change history. What if we combine 6,131 of these lithium-ion cells? Could we make an electric sports car? That single question became Tesla's origin story. 1 year later, in 2004, Elon Musk, fresh off selling PayPal for $1.5 billion, heard about the project. He was intrigued. He invested $6.5 million, becoming Tesla's largest shareholder and its chairman. Fast forward to 2007. Tesla was running out of cash. The board felt the company's original CEO couldn't manage finances effectively, so they made a crucial decision. They fired him and appointed Musk as interim CEO. Musk wasn't yet the icon we know today. He was just another entrepreneur under pressure, but what happened next would define him. In 2008, the global financial crisis hit. Credit dried up. Orders disappeared. Tesla was bleeding cash, with bankruptcy right around the corner. To make it worse, Musk's other company, SpaceX, had also run into severe financial trouble. He had a choice: save one or lose both. He chose both. He sold his houses, mortgaged his assets, borrowed money from friends for living expenses, and poured every dollar of his PayPal fortune, over $180 million, into Tesla and SpaceX. He was all in. Then when everything looked lost, 2 miracles happened. In June 2009, Daimler stepped in with a $50 million investment. 1 month later, the US Department of Energy approved a $465 million low-interest loan to Tesla. Those 2 deals pulled Tesla back from the edge of death. Only a year later, in June 2010, Tesla went public on the Nasdaq. For most companies, going public is the finish line. For Tesla, it was just the starting gun. Back then, Tesla's valuation was tiny, only around $3 billion. That's when Musk introduced his first compensation plan, one of the boldest in corporate history. He told the board, "I don't want a salary. I'll take stock options only if I achieve specific targets." Those targets: grow Tesla's market cap from $3 billion to $65 billion, boost annual revenue from $400 million to $35 billion, increase annual production from 3,000 cars to 500,000. Wall Street laughed at him, but 6 years later, he hit every single goal. Then came round 2. After reaching those targets, Tesla ran into its next crisis. Model 3 production issues, cash flow problems, and SEC investigations. But Musk doubled down again. He proposed a second compensation plan. This time, the goal was to lift Tesla's valuation from $65 billion to $650 billion. People said it was impossible. 3 years later, Tesla blew past $1 trillion. Here's what that tells us. Every time Musk ties his compensation to Tesla's stock price, he wins. But after 2023, things slowed. EV demand softened. US incentives shrank. Europe's EV subsidies faded. Meanwhile, Chinese EV makers like BYD exploded, selling over 4 million vehicles in 2024, nearly double Tesla's. Tesla's 2024 deliveries actually fell about 1.79 million vehicles, down from the year before. That was the first negative growth year in Tesla's modern history. The Cybertruck, hyped for years, was also slower to ramp, only about 30,000 units delivered. Investors started doubting Tesla's growth forever story. Then, last month, Elon Musk dropped his third and boldest compensation plan yet. This time, the target is massive. Grow Tesla's market cap from around $1 trillion to $8.5 trillion within 10 years, an 8x increase. So where does that growth come from? It's no longer just about selling cars. Musk's plan now revolves around three massive growth pillars, each with trillion-dollar potential: FSD, full self-driving, robotaxi, and Optimus, Tesla's humanoid robot. Let's break them down. First, FSD, full self-driving subscriptions. This isn't a future dream, it's already generating real revenue. By 2025, FSD is available in the US, Canada, China, Australia, and several other regions. Right now, it's still technically driver assist, not fully autonomous, but it's improving fast. In late 2024, Tesla slashed the FSD subscription price from $199 per month to $99. A smart move to drive adoption. Musk's goal: 10 million paying users within the next decade. Let's do the math. At $1,000 per year per user, that's $10 billion in annual revenue. Assume 10 to 20% profit margin, $1 to $2 billion in profit. Now apply Tesla's current PE multiple of roughly 100x, and FSD alone could add $100–200 billion in market value. But here's the kicker. Once full autonomy arrives, margins could skyrocket. If Tesla reaches true self-driving before competitors like Google's Waymo, it could easily justify a multi-trillion valuation from this segment alone. Now, onto the second pillar, robotaxi, Tesla's autonomous ride-hailing network. Think of it as the real-life version of Drive to Earn. You buy a Tesla, and when you're not using it, it works for you, picking up passengers, earning cash 24/7. Right now, the main barrier is regulatory approval. Only a few US states have issued driverless taxi permits. But when the green light comes, Tesla's network could scale instantly because millions of Teslas are already on the road with the hardware needed. If just 1 million cars join the robotaxi network, and each generates about $50,000 a year in profit, that's $50 billion in annual profit. Apply the same 100x valuation multiple, and you're looking at a potential $5 trillion in added market value. That's the scale we're talking about. Tesla doesn't need to sell the cars anymore. The cars sell themselves by generating income for owners. That's a decentralized transportation network, way beyond Uber or Lyft. Now, the third and final pillar, Optimus, Tesla's humanoid robot. At first, people thought it was a joke. But Musk's team has already showcased working prototypes powered by Tesla's own Dojo AI chips and FSD visual recognition systems. Optimus isn't science fiction anymore. It's real hardware being tested inside Tesla's factories right now. The goal is to mass-produce robots for both industrial and household use. Musk says he's confident he can bring the cost down to $20,000–$30,000 per unit. Imagine factories filled with Tesla-built robots working 24/7. No breaks, no vacations. Let's be conservative. Suppose Tesla deploys 1 million Optimus units worldwide. If each robot generates just $50,000 of annual value in labor savings or productivity, that's $50 billion in profit potential. At a 100x valuation multiple, that's another $5 trillion in potential market cap. So, when you add it all up, FSD, $1 trillion potential. Robotaxi, $5 trillion potential. Optimus, $5 trillion potential. That's $11 trillion of potential valuation upside, comfortably covering Musk's $8.5 trillion goal. But here's where it gets even more fascinating. These three businesses are interconnected. FSD powers Robotaxi. The same AI models and hardware that train autonomous cars can train robots, and Tesla's vertical integration, from chips to software to factories, means every part of this ecosystem strengthens the others. It's not just a car company anymore. It's an AI plus robotics plus energy platform, capable of generating recurring revenue across multiple trillion-dollar industries. And if we look back at Musk's track record, it's hard to ignore a pattern. Every impossible goal he set for Tesla, he's delivered. From surviving bankruptcy, to mass-producing EVs, to hitting $1 trillion valuation, each time he's bet the company, and each time he's won. So as crazy as an $8.5 trillion valuation sounds, history tells us not to bet against him. Tesla isn't just making vehicles anymore, it's building a decentralized machine network, cars that drive themselves, robots that work for you, and AI systems that improve continuously. In a sense, this mirrors what we see in the crypto world, where every node contributes to a larger network and earns rewards. But in Tesla's case, the nodes are physical machines, vehicles and robots generating real-world cash flow. For everyday investors, that means the next wave of wealth creation may not just come from tokens or coins, but from these physical AI assets that can earn income while you sleep. So when people say Bitcoin changed the world, they're right. But Tesla might just be doing it again in the real economy. Like and subscribe, because in the next videos, we'll break down more of these once-in-a-decade opportunities, one by one.